Welcome to Thoughts on the Market. I'm Michael Zezas, Head of Public Policy Research and Municipal Strategy for Morgan Stanley. Along with my colleagues bringing you a variety of perspectives, I'll be talking about the intersection between U.S. public policy and financial markets. It's Wednesday, March 24th at 11 a.m. in New York. Last week, a meeting between the U.S. and China laid bare economic tensions between the countries. The public part of such meetings are usually marked by statements of goodwill and commitment to cooperation, regardless of private concerns. Yet this meeting stood out for the frank statements of both sides on their grievances with the other. For investors, this should dispel any notion that the transition from the Trump administration to the Biden administration would usher in a more conciliatory approach to China and a quick path to trade barrier reduction. A harmonious economic relationship between the two countries could be in the future, but not without some tough choices beforehand. So there's value in being aware of how this transition plays out, as it creates headwinds for some key equity sectors and opportunities in others. On the negative side, we think the U.S. is likely to continue raising non-tariff barriers. That could include export restriction controls reaching into new industries as emerging technologies around, for example, artificial intelligence and advanced batteries become more common. Near term, this creates the most risk for the semiconductor industry in Greater China if it incentivizes the U.S. to make greater investments in a fully domestic semiconductor supply chain. On the positive side, it could also boost domestic investment in the U.S., creating benefits for cyclical sectors like U.S. financials. Consider legislative efforts coming together in Washington, D.C., which are meant to incentivize domestic investment in key technologies in their supply chains. Media reports suggest two such pieces of legislation, the Endless Frontiers Act and the Chips for America Act, are likely to receive serious consideration this year. And a catalyst to these actions entering the market's consciousness is also on the horizon. A recent executive order by the Biden administration shows it planned to issue reports by late May or early June on laws and regulations needed to ensure supply chain security on key technologies. The bottom line is this: the evolution of the U.S.-China relationship remains critically important to markets. We'll of course keep an eye on it and keep you in the loop. Thanks for listening. If you enjoy the show, please share Thoughts on the Market with a friend or colleague, or leave us a review on Apple Podcasts. It helps more people find the show.
The preceding content is informational only and based on information available when created. It is not an offer or a solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.